It's time to just take a big deep breath, relax, okay, and approach the market very calmly. There's millions of reasons as to why. Not really millions. Reasons to why this market could go down further. We have all the Delta concerns. Consumer confidence fell off of a cliff, right? We have the potential for Fed taper. The market breadth's been horrible and atrocious. We've been talking about divergences for quite some time. There's so many different reasons. Oh, and not to mention Evergrande, right? Evergrande. It's never grand when this stuff happens. Holy moly. Okay, so we got a lot to talk about today. We're going to map out some key levels, and we're going to be looking and breaking this down to quarterly, monthly, daily charts, and then we're going to be getting into kind of some stock market indicators and some various other aspects, and put a plan together. Okay, we got a lot to talk about. I'm going to try to keep this compressed. Let's get into the show. What's up, everybody? Welcome back. Alrighty then. Okay, back to what we're talking about here, so I don't waste time. Red across the board. VIX up. Fear. Panic. Everyone's calling a crash. But this is typical when we see market sell-offs. Now, the Dow was down almost 1,000 points today. It rallied back towards the end. It was crazy, right? Now we got that 5% correction in the S&P 500. I mean, 5% pullback, right? We're halfway to a correction. 10% is technically the Wall Street definition of a correction, right? What led the way? Well, defense led the way. That means that they're outperforming the S&P 500. All right, but they're all in the red, all 11 sectors. Let's look at some time frames. Quarterly time frame. We've been talking about just how overextended this is, and now we're getting a little bit of a wolf candle, right? This is a reversal type candle. It's a sheep's in wolf clothing, right? You get big green candles and all of a sudden momentum slows down. You can see the range of the candle shortens. But then also on top of that, you have this long upper wick. Does that mean crash? Doesn't mean anything really at this point. The only thing that I want you guys to be doing right now is mapping out key levels. The key level is the 5 EMA. That's a simple, just most frequently tagged moving average. Where's that at? It's at 3974. So write that down quarterly, okay? Like write a section down or something to say quarterly, support levels that you want to keep an eye on. This one for the S&P 500 is going to be 4,000. INDU, the Dow Jones Industrial average is going to be 32,000. Now the quarter is almost over, so depends on where we end, but this can also lift up, which we'll reconsider here at month's end. But as of right now, 32,000 on the Dow Jones Industrial average. NASDAQ 100 on the quarterly is going to be 13,300. We're going to call it. It's a little bit higher than that, but that's what we'll call it for right now. And you can see how the price is just obviously overextended outside of the upper Bollinger Bands on these things. Absolutely insane. And eventually, this is obviously long term here. It reverts to a mean, and we don't know where that mean actually is. I mean, if you're looking at the Bollinger Bands, it'd be in the middle of the Bollinger Bands, but who knows when it actually reverts there. It could be multiple quarters, and this would keep obviously heading up at that point. IWM, the area to watch would be the 203, so we're just going to call it 200. All right. You can see here we're seeing weakness on the quarter, pretty bearish looking candle, almost engulfed the entire thing. It did engulf the previous quarter body, and we're down 5% on the quarter. Let's look at the monthly time frame. Monthly time frame for the S&P 500. Guess what? We tagged the level, and then we bounced from that level. All right. But the month, it's still not over. We don't know where we're going to end, and it's finding support at that level. Are you surprised? I'm not really that surprised. So there was a low of 4305. And the EMA is at 4323. So it was pretty darn spot on. All right. So we'll see how the month finishes up. The next level, though, is 4100. That's the 10 EMA. And guess what? That also kind of lines up pretty darn close to the quarterly 5. Dow Jones Industrial Average, we actually cracked down through the monthly 5 EMA, which is, if we close below that, I'd be shocked. I would be surprised because we haven't had a monthly close since October of 2020, right? And that was when we had all that volatility there. We closed right below the 5 monthly EMA. So the 10 monthly EMA is in target zone. That's 33,000. And the NASDAQ 100, we still haven't tagged the monthly 5 EMA. The month is looking like a bearish reversal type candle so far. We'll see where that finishes. But this support is at 14,000. We're going to call it 700. And below that is 28,000 flat, and that's going to be the 10 monthly EMA. Those are the levels that I'll be watching if we get continued selling. I'll get into my thoughts here soon. IWM hasn't gone really anywhere, but this month it's looking pretty darn bearish, right? Not only was it a gap up and just embodied this entire previous monthly hammer candle, but we're below the monthly 5 EMA. The PO oscillator has been just dying off here, and it looks like it's about to cross down through that, but we're still holding the 10 EMA. You can see how the price action bounced there, and that's at 211. Okay, so we've been saying what, 210, right? Well, 210 to 211, that's right there on the monthly IWM 10-week EMA. Holy moly. Daily. All right, so this is where it gets interesting. We crack down through a technical area. What takes place? Well, we're seeing some, forced selling. We're seeing people liquidate their positions. Do we know if this is, what this is caused from? I mean, like I said, we named off a bunch of things, the cause of, what it could be. Everyone's running for narratives. It's Evergrande. That Evergrande has been a slow-moving ship. Everyone's been, that's nothing new. People have been saying this. Now we're starting to see effects, and we don't know. You're going to start hearing the word contagion. Contagion. Is there going to be contagion more frequently? And I don't know, and most people don't know. No one knows really what's going to actually take place from this. Okay, so what do you do in situations like this? Well, you just sit and you sit back. Like, don't get too aggressive, because yes, we can have continued selling. We found support at the 100-day moving average. We're below the lower Bollinger Band. So yeah, this can produce bounces. Okay, so we can get an aggressive move right back up. That's very possible. Coming into Tuesday, turnaround Tuesday, let's head higher. But we had a technical break, and it's basically been a channel for a year, right? Even longer than that. It goes back further. If you really break out the channel, and that has implications. You're going to have people sell on that, and that's what we got. And perhaps, that's what we're seeing is an exhaustion, like a big bar of volume to signal exhaustion selling, and then that flushes all the weak hands out, and then you could potentially see that rally. Keep in mind, we have the Fed meeting coming up, right? And we don't know what's going to be said or done with all of that. So, if you don't like this volatility, which a lot of money could be made in volatile times, sit on your hands, chill, relax. Or if you're trading or you're putting in positions, reduce your position size. That's all you got to do in these situations. All right, don't be the hero. Don't try to tag bottoms. It's pointless. It's you can get lucky, but the chances of you tagging bottoms, if you keep doing that time and time again, there'll be times, obviously, if that's your strategy, where you're completely wrong. And if you're completely wrong and you don't get out of that position, or you're not managing risk, well, then you get blown up. Dow Jones Industrial Average, we've been falling pretty significantly, down 1.78% on the day, extended below the lower Bollinger Band. Look where we tagged in the middle of this, right on the volume shelf profile. We got below that, and then we came back up. Yes, we're below some key moving averages, but we're still above the 200. Okay, so if we start cracking down through this previous low, I'd start looking at 33,000 to 33,250, which lines up with some of those other key levels we've been talking about. Make sure you wrote those down if you didn't. Go back and write them down, because they are important, widely tracked exponential moving averages, okay? And they're on separate time frames, so you can kind of look at multiple time frames to see where we might get bounces. Okay, NASDAQ, this is interesting, right? We had this as an area of support, and guess what? The cash market never wanted to test it, so what happens? Overnight, gaps right through it. Isn't that fun? We've been talking about divergences, and we've been talking about this frequently, where if you can't do it in the cash market, you just get this overnight gap. And instead, there's no point in basically, trying to, guess when the market's going to crash. The market can crash really at any point, but chances are, if you're not already positioned, you missed the move. And the thing is, this is what I mean by that, is it happens overnight, and it happens very quick. It can happen again. But like I said, we're going to map out key levels to find levels of support to potentially play bounces, because I still personally believe that there are going to be people stepping in to buy this dip. I think that there's a lot of fear out there. I feel like people are trying to call a top, but we don't actually necessarily know what's going to come from all of this. I mean, shoot, right? The Fed is talking about, how they're getting out of positions, which is a weird red flag to say that all of a sudden that, they put on multi-million-dollar positions. Now for the concerns at the very top, they're getting out, and now the market's selling off. The market is talking. The market is speaking right now, saying if you do tapering, if you do anything, we're going to fall apart. But why would the Fed care if they're removing their positions and going into cash, right? IWM on the daily time frame, I went on a rant there. We broke down further, but we're still within this channel. Hammer candle right there at the lower Bollinger Band. Big thing in volume that took place. Could be an exhaustion bar. Hammer candle. Why we could bounce from those levels. We had a hammer candle kind of here on the SPX. On the SPY, we definitely did have a hammer candle. This buying that took place towards the end of the trading session. And, you know, this is all about probabilities, right? How we play. I want to really quickly talk on this, but we've been talking about the 50-day moving average. It gets bought, it got 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 bought, and it actually got bought on the day we talked about it and got ripped up, and we saw so it's just a really good positive day, but then we had continued selling. Okay, so eventually, what we've been saying is it's eventually going to break, and it broke, and now it's going to have technical implications, right? Now we get more forced selling. So now we got to see what the market wants to do. You need to be patient because right now the options market, if you just look at just what the options is pricing in as far as what they expect to see take place in the next few days. I mean, it's upticked in volatility. So it's still right there in our face. We can have big swings this week. So just be caution of that. Let's look at some indicators. Negative divergence, right? We've been talking about that for quite some time, but I will say that it hasn't really broke down through this channel yet. Let's pay attention to see if that does take place, which, by the way, it could potentially be putting in a positive divergence. You have a low and a higher low, and then you have a low and you have a lower low. So technically, now, you know, what was a negative divergence, now we can look for positive divergences potentially taking place. Same thing right here with the NYMO. First off, this big move down, you would think it would force more breadth to the downside. So that could signal one of two things. It could signal that there's going to be more forced selling coming into tomorrow. However, a positive way to look at this is we have a positive divergence, and we've been tracking negative divergences. So a low, a lower low, a high, a higher, a low, a higher low. So technically here, that's a positive divergence, and coming into the Tuesday, that turnaround Tuesday is a possibility. And if you look at breadth fell off a cliff into this oversold territory. The percent of stocks above the 50-day moving average fell off a cliff, 31. All right, and this, like we've been talking about, that's been diverging for a long time. And divergences matter when they matter. So perhaps this is the market signaling, okay, this is the flush. Now let's see what takes place. Keep in mind, the start of bear markets, or even in bear markets, guess what you get? Significant bull rallies. So very strong movements to the upside. Okay, XLP over SPY. This is really just looking at the rate of change to consumer staples to the S&P 500, right? So basically it's saying when this line goes up, you know, defense, you know, we're focusing on necessities, and we're getting out of risk. And obviously you can see it goes down. That means risk is on, you know, more people are piled into equities. And what I found interesting here was, I talked about this in previous episodes, but 2007 to 2008, you get this huge spike up. That was the financial crisis, right? There was a positive divergence taking place on the rock. This is the rate of change. And then you saw, obviously, right here, is a positive divergence when you're comparing it to the XLP SPY. But right now, taking place. Oh, and the same thing also going into the COVID crash, right? Positive divergence, you have a low, a higher low, a low, a lower low, and then pow, spam to the upside, right? Well, we have a positive divergence taking place here in 2021, and the rate of change just clicked up for the first time in a while, above zero. So it's a possibility, right? This could be the start of consumer staples, a more defensive sector, outperforming the S&P 500, and that does not mean that consumer staples has to go up, right? It means that on a relative basis, it can perform better potentially. So that's something that I'm going to be watching out for consumer staples to potentially be outperforming the S&P 500. And if that is the case, you know, that could signal that we're going to continue to be a little bit more defensive than usual, right? Here we go, the NIAD advanced decline line. This is just looking at it a little bit differently. 2250 right here, 2266 is the print. That's oversold. Okay, when we produce these low levels, yes, it can go lower, but it typically boom, 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 right here, boom, boom, boom. It signals short-term bottoms and we get bounces. Okay, so just wanted to call out that. That means that we can definitely go bouncing into tomorrow. Another thing to pay attention to is equal weight. When we have these big down days right here, what happens? Well, it's an exhaustion type move and we get a bounce back up. It could be the start of a breakdown, but I just want to call out probabilities, right? 1, 2, 3, and they've all bounced. Okay, so this is the fourth. That's a big candle getting below the 50-day moving average, like this one, and this one. And each of those times, it definitely followed through and bounced. But I will note this. Each of these times, the S&P 500 was above the 50-day moving average. So that would be the difference there, okay? BP&DX chart, the percent of stocks that are on buy signals based off of point and figure charts, the tic-tac-toe boards, I like to call them. We're seeing a reading of 48. So 48% of the stocks in the NASDAQ 100 are on those buy signals. We are in a seasonality period where you get more volatility. But what I want to call out here is that we are oversold in the RSI. Yes, breakdowns can occur at this level, but we also can look at the longer term chart and you can say, hey, it's just still trending up and we're getting a pullback. It's getting oversold. Are you going to see people buy the dip? I can tell you retail traders look very scared to buy the dip today. However, you never know. That can very well change. And then when we start seeing the move up, then they might pile all in and then you get an explosive rally. BP-SPX chart, same thing. Had a small positive divergence. That got destroyed today, but it is getting pretty overextended. We haven't seen this extended of a reading since actually the pandemic. During the start of the COVID crash here, it got lower, obviously. So it could be the start of something bigger, obviously, right? I mean, what's interesting to me is, both times it happened off of China news, right? So this one, everyone's talking. They're using it as near as Evergrande. We don't know what's going to come from that. Okay, it's China. And then over here was what? Well, came from China. And it both happened on what? A Monday. So we're seeing very, very similar type things take place here. Not that that matters, and don't use that as a narrative for anything. Honestly, times are always different. Let's play the price action for what's in front of us. Negative divergence here on the NIA. This is advanced decline volume line. This is a huge just spill off. Very, very oversold here too as well. So, and on top of that, that was during this crack, this big crack of this falling wedge. So yeah, sheesh, it could be this, like I said, it could be the start of something big here, which means what? All right, it means just pause, take a break. Me personally, I do not think that the market hit an all-time, I don't think that that's it. Now we go into this prolonged bear market forever, and we're never gonna hit that high again. I don't think that that's the case. I think we can go through a long period of consolidation. I would say there's every reason to believe that the market can continue falling. Every single reason. But would the Federal Reserve really allow that to happen? Would they? I doubt it. I personally doubt it. Would it be healthy to all of a sudden jack rates up? Yeah. But it'd be very painful. So, what we can do is we can do a couple of things. We can just, put your hands on your lap, chill for a moment, stop trying to chase, stop trying to run, calm down, right? Relax, breathe, and then we could play this as time progresses. You don't need to just, try to pinpoint and do all this kind of stuff. And if you want to do all this kind of stuff and trade, just be careful because you can get your head ripped off during these times, right? It's crazy. The NYSE summation index, we're below zero. Okay, that's when big crashes take place. However, yes, we're back below zero. One thing to really watch for is the NIMOT. Bigger crashes. The big crashes happen when this reading was right at around minus 300 and this was at below zero. We're not there yet, and we've been talking about that on previous episodes. But what I do want to call out is we have a positive divergence. You have the New York Stock Exchange putting in a lower low compared to this, and you have the NIMOT putting in a higher low taking place. So yeah, interesting. The VIX Volatility Index, we broke out of this rising wedge, so this can be the start of something big. We have a little bit of a shooting star candle. Week's not over. We got to see where the week finishes. Obviously, we've been talking about contraction can lead to expansion. On the last market brief, we were right up here and we said, hey, this could be the start of something big. And, unfortunately, these type of moves, they typically happen when you can't do anything about it. Right? So if you have stocks that are locked up and overnight futures market just gaps you right through everything, sometimes this happens. So it's important to protect your portfolio, reduce position size, put on stop losses, have hedges, do what you got to do to feel safe for your current strategy. But you can see here, when it got contracted, we had spike of volatility. And guess what? We're getting contracted. We haven't seen this type of contraction for quite some time. Pow. You're getting a spike of volatility. Is it going to be something huge and bigger than this? Sorry, can't tell you. If it is, just be prepared. Look at those key levels and take shots at key levels. That's what you got to do. VXN, NASDAQ vol, same thing. Pop, contraction leads to expansion. Broke up, talking about that positive divergence on the VIX or on the RSI. Remember, higher lows, this put in lower lows, bam, poof, flying up higher. Same thing with RVX. This is Russell vol, contraction, expansion. Do we know if this is going to last? No. No, we don't. There's, like I said, every single reason possible to believe that this can go higher and more fear can set in the markets and the market can continue to fall lower and lower. There's every reason possible to think so. That's why, me personally, I've been heavy cash. I've been taking long positions. I've just been playing with the trend. And it's okay to see hits to the downside when you are positioned correctly. And you're okay to see this type of volatility. So if you're going YOLO, it's unfortunately going to wipe out a lot of traders' accounts because of all you're doing is just leveraging up on call options. It's a very dangerous trade. The dollar put in a little bit of a shooting star type candle, right? Okay, long upper wick, and guess where it tagged? The trend that it broke and this previous area of resistance. Is the dollar going to continue to head higher? Long-term chart suggests that it does, but keep in mind the S&P 500 did break its trend. So we talked about here, it looked like it was going to bounce. Bam, it moved back up. Guess what? The S&P 500 goes down. Commodities suffered too. Now what's going to happen? Is this going to start falling back down? And that's where the S&P 500 just rips higher because of all this fear. Perhaps, hey, who knows? We might get a gap up tomorrow. And then all of a sudden, everyone tomorrow is going to be like, it's a island reversal candle. That'll be the news tomorrow if we get a gap up. Everyone's going to talk about that. Let's look at the monthly time frame. What did I mean by that? Monthly time frame, so shorter term. I mean, technically it's longer term. The monthly 5 EMA is cranking up. Price action's above it. Bullish crossover. Every time we had one, we spiked higher. I'm not going to get too into that. Let's get into bonds. This is also another reason why I don't think the market's really going to go crazy to the downside. And this could change. But bonds didn't do anything. Really? They didn't do much. You would think that this would start exploding to the upside. Still, we broke out of the symmetrical triangle. Target's still 156, so yeah, I can still head. But keep in mind, we had a pullback. What did we say last time there was a pullback when it came up into this area? That typically it gets reversed, and then you see this pop higher. And that's what happened that trading day right in here where we saw the S&P 500 move higher. Okay? Like I said, though, just be mindful. The target here would be about 156, which matches that volume shelf profile and the measured move of this symmetrical triangle. Another thing to pay attention to is the TNX. I redrew this out. It was a bear flag, but now I'm like, ooh, actually, that's a pretty solid trend from this wick, this high, and this high, and this high. So this trend looks pretty important. If we start breaking above that, that could signify, okay, the 10-year yield's heading higher, pushes TLT down. We'll see which TLT is the 10-year bond. So really, honestly, we're still right here packed in the middle. Haven't gone anywhere for quite some time. We've been consolidating since July, right? Consolidating. Boom, boom, boom. But guess what we're doing? Expansion, contraction leads to expansion. Okay, we're contracting. We're coiling up tighter. So we haven't broke it yet. So that means if we do break it, that could signal something, all right? But as it stands right now, we're not seeing anything crazy. Yeah, it was down a decent number, down minus 4.45%. But nothing crazy taking place here. PPO looks like it's about to have a bearish crossover. So yeah, perhaps we do break down. And this might turn into just a sideways channel, perhaps. Okay, well, that's something that we just got to be mindful of. Let's take a look at commodities. Oil, big time down on the day, down 2.34%. But if you just take a look at this trend, we broke out. This could be back testing right into the key moving averages. We're still above the 50, still above the 20, which is inclining. So short-term bullish, and we're above the 100 and above the 200. Nice spread between those. So it's still in bullish context. That's going to take, where's all the fear coming from right now? It's not there yet. So that means to me that people are trying to predict what will happen. And that's fine to do so. You can try to predict, but as it stands right now, we're just not there. Okay. Gold. Potential for an inverse head and shoulders. If you didn't watch my gold episode, I went into more detail on some key charts and bigger time frames, but that's the only thing that I'm looking at here. So yeah, perhaps if there's more fear, that sets up a big run for gold, potentially gold miners. Up slightly on the day, but really nothing much, up almost 1%. Silver. It's right here at this area of support after a crackdown through that channel, right at around that 22 marker today, hit it a low of 22.02. So we got a lot of fear here in the metal market. If this starts cracking down these 2 wicks, oh man, that could be bad for silver here. So we'll continue to monitor that. Let's take a quick look at Bitcoin. Bitcoin's getting obliterated. It was down 9% when I pulled this chart for the day. It's a big move and a big move in volume. Holy macaronis. But we're still above this 42,000. You can see it act as support, resistance. We broke out. Perhaps it acts as support as the 100-day moving average is still turning up. So, just be mindful of this area. If you watch that Sailor to Shift video, Sailor to Shift rotation video, the best Bitcoin indicator that I put out, the only one that I put out, it is on a sell signal. It was on a sell signal on this candle right here. And depending on where your stop is, you'd technically be stopped out if you're looking at the weekly time frame. And then you just wait for the next buy signal. And the next buy signal, we don't know when that's going to trigger, but then you can enter in. The last buy signal was right here. And I entered in and took this big run up. And then my position got stopped right here. So the next buy signal I wait for. So just so you know, I got stopped out. But, however, we're still above this key area of resistance. And by stopped out, I mean I exited the position. There's not a stop loss that you can put on, at least that I know of as of right now. Perhaps in the Bitcoin futures on, maybe, I don't really know. I haven't traded Bitcoin futures. I just bought a small position. Okay, so back to what I was saying. I got out early, but the week wasn't finished fully yet. So, I kind of jumped the gun on that, but that's okay. And now I just wait for the next buy signal. If the next buy signal triggers, well, then I'll be entering in a little bit higher. I took profits, obviously. So I realized profits on this move. That was on Ethereum play was up 60%. That's a big move. Okay. So I'm fine with that. Bitcoin was up, I think 20% on that move, 20 something percent. So yeah, if it falls further, I still wait for the next buy signal. And I'm not hurt. If it goes back up, well, then a buy signal will get triggered and then I entered in. It's really that simple. Conclusion, everybody. La conclusion. Let's get into it. Okay. I want to recap here. We went over some key levels. There's a lot of fear in the air and you shouldn't care. Well, maybe you should, depending on how you're positioned. But relax. Be calm. It's only one day. And guess what? It's Monday the 20th. We've seen that on around the third Friday of the month, around this time, during this option expiration, we get these hits to the downside. Yes, we're coming into an area and we have all the reasons to be scared. Market breadth, right? Those divergences we talked about, Delta concerns, all, consumers, they just their confidence levels, if you look at those reports, fell off a cliff. Okay? Not millions, a lot of reasons. But right now, it's a time to just not panic. You got to be calm. You got to be cool. You got to be collective. If it falls down further, guess what? That's fine. It's going to offer up more opportunity. The biggest opportunities come during these times. You just need to be patient. Okay? That's all I got for you on today's episode. See ya.